5b was a difficult question. The average was only 35%, one of the lower averages for the entire paper. And what you're asked to do is prepare the cash flows from financing activities section of the cash flow statement for the year ended 30th of June. So what we want to remember is the definition of a financing activity. It is cash flows that result from changes in the firm's financial structure. So there'll be inflows and outflows, and there'll be two of each. An inflow will be capital contribution of cash, and the outflow will be drawings of cash. So remember, this is a cash flow statement, so we're not going to consider anything that's not a cash contribution or cash drawings. There'll also be borrowing of money and also repaying those amounts back to banks. So what we want to do is go and look for those four items from the information we've been given. So we've been given some totals from the income statement and the balance sheet there. So we can see, let's start with the loan. We can see this is representing the financial year 2014 to 15. At the beginning, zero of that loan was current and 50,000 was non-current. And then at the end, 25,000 was current and 25,000 was non-current. So what's difficult to tell here was, well, did we borrow any more money and did we pay any back? So I think what we want to do is we want to look at these two figures at the start and go, well, between 0 and 50 we owed 50,000. And then between 25 and 25 at the end we owed 50,000. So we actually owe the exact same amount as what we did at the start of the year. So what's happened here is absolutely nothing. We haven't borrowed any more money, we haven't repaid any more money. This just looks like a 2-year loan that needs to be paid at the end, and it looks like we didn't pay any of it during 2015. So therefore we actually don't have any amounts for borrowings or loan repayments. We can now look for the capital contributions and drawings. Now, if we just look at our information we were given on the previous slide there, we don't have that. We have the income statement and the balance sheet. Those items aren't shown, so we're going to need to try and figure it out from the other information. We've been told stock levels are constant, all drawings were cash, and then the owner contributed $95,000 of capital, comprising $75,000 cash and $20,000 of equipment. So we don't need that information about the stock. For drawings we do need, but we don't have a number. So what we need to remember there is we need to follow forward our answers from earlier questions. So in question 5a we had to figure out a figure for drawings. So whatever figure you got, now we got 45,000, but whatever figure you had for that question, you're going to carry that forward and that will be your figure for drawings. Lastly, we have the owner contributing $95,000. However, because this is a cash flow statement, we don't care about the equipment. We just want to have the cash of $75,000. And now we have all the possible inflows and outflows from financing. So all we can do now is transfer these over and make our report. So we do capital on contribution 75, drawings of 45 in brackets to represent a negative, and then we put in a net cash flow from financing of 30,000. Looking at our mark breakdown, there were two marks, one for the capital contribution and one for drawings. And the marks were, a lot of kids had trouble with the 55% getting 0. Obviously, there were problems because 3 out of these 4 numbers, or 2 you didn't have to do anything, and then 1 you had to take from a previous question. So that did make it kind of difficult. At the top end, 19% of kids got 2 out of 2, and the average was 0.7. The examiner's comments were, this question required students to bring forward their answers, so that's always a difficult thing. It's asking you to use information you've already done. And many students included a loan or a loan repayment. However, as we sort of looking at the classification of the loan, no money was actually borrowed or repaid.